Hey everybody, Jake here, TrendSpider, to go over the weekend update into the second half of May. And surprise, surprise, another volatile week, actually the seventh red week in a row. And so what I want to do is touch on something called the pattern recognition feature on TrendSpider that when we have big moves up or big moves down with multi-weeks in a row, one way or the other, it does give you a good gauge on, how common is this. So one thing that you can do is click on patterns here. What I typed in was just 6, and I clicked 6 red candles. And so we have 2 boxes here because it's essentially counting 6 red candles and then starting again, counting another 6 red candles. So 7 red candles in a row. And if you zoom back, if you look back and zoom out, this has not happened since 2007. So you can see here, we did have a 6 red candle week in a row. The next week here, you actually did have a green week. So we didn't even have 7 red weeks in a row during the 2007 to 2009 financial crisis. But what's interesting is you did have a little bit of a dead cat bounce here over the next month or two. So, are we going to get a dead cat bounce? We'll see. If we keep scrolling back, you'll see here that we did have these types of moves during the .com bust as well. So I'm not here trying to scare people saying that we're not done yet, whatever. I'm just pointing out that literally these are the statistics, and this is the last time we did have this and what happened after that. So if we do look at kind of the current chart, you'll see here that we did bounce off the COVID low VWAP. You can see it here on the weekly chart, but you can also see it on the daily chart. And something that was really cool about this week and over the last couple of weeks was essentially this previous support zone acting as a resistance zone multiple times and getting rejected here. And we actually ended up closing the day green for the SPY, which doesn't look incredibly bad going into the week ahead, possibly another retest at least of this area above. We could actually get a little bit of a bear market rally. Everybody's talking this is officially a bear market now, which could be a contrarian indicator. So we'll see what happens, but all in all, the COVID VWAP is holding. That's important. And just keep an eye on this, let's say 406 all the way up to around 408 area above going into next week, which is the previous support zone, which has acted as resistance over the last 10 or so days. Going into the Qs, pretty similar setup here across the broad markets, honestly. You had this previous support zone, and then this area acted as a resistance zone. We did not fill the November 2020 gap. We did get close today on Friday, but we did not actually fill it. But all in all, we did close red on the day versus SPY's green close for Friday. Now, on the upside, if we have the same type of move that could possibly happen for SPY, this previous support zone is right around 305 up to around 306. And the downside is that gap below right around 276.50 or so. Now, if you look at the weekly chart, this is something that Brian Shannon, the founder of Alpha Trends and really the godfather of anchored VWAPs and a mentor to me, highlighted this earlier today that the 2018 low VWAP is exactly where we held almost to the penny this week. So this 2018 low VWAP is definitely an area to keep an eye on. This is the 7th red week in a row as well for the Qs. And if we do the same type of thing that we just did with SPY, you'll see here that we actually did have this happen back in 2012, 2013, and that did mark a bottom in the markets. So, are we going to get that again? We'll have to see. But if we scroll back some more, you'll see here that we also had it back in 2008, and we had a pretty strong bounce after that. So all in all, these really consistent week over week moves down, 6, 7 red candles in a row have yielded some decent little dead cat bounces at the least. This could be maybe a reversal. We'll just have to see. But for now, that is something to consider what has happened in the past when we've had this type of setup occur. So make sure to check out the pattern recognition feature. If, you can literally highlight any pattern that you want. You can do green candles in a row, red candles in a row, hammers, whatever. It is a really powerful feature. So going into IWM, As I mentioned, pretty much all the broad markets looking pretty similar here. This previous support zone acted as resistance earlier in the week. We do have the 2020 November gap below. So that is down here around 165.50, give or take a few cents. And then the upside here is this previous support zone acting as resistance back on, was that Tuesday? And, that goes all the way up to around 184 to 185. So that would be your level to watch above. And if we get above that, then that's when things could get interesting for a bigger rally in the markets. Now, you can see this gap is actually a weekly gap when you look at the weekly chart. So, do we fill it? We'll have to see. But all in all, definitely a big area I think a lot of people are watching. If you extend this to the left a little bit, this is also right where we had the previous highs in 2020 before COVID. So this area in general is a very strong area. And if we highlight this area, this high back in 2020, you'll see that we literally bounced right at that area over the last 2 weeks. So all in all, we're at a very important level in the markets, especially for IWM here, and we'll see how it plays out going into the rest of the month. Now, we're just going to look at Bitcoin simply because Bitcoin, Ethereum, they've all been moving very similar. The main thing about Bitcoin here is the fact that we are holding this horizontal level here highlighted in orange. And if we do actually close below this level, I think that's when things get a little iffy. But also, if we can hold this previous low that we saw back on May 11th, that could definitely be a potential short-term bottom. If you look at the weekly chart, you have these 2018 and COVID low VWAPs here acting as really nice areas of resistance and support. So we can't call it resistance or support until after the fact. That's another thing Brian always mentions about these VWAPs and these levels. So the level below is right around 25.5. The level above, which is the COVID low VWAP, is right around 32,700 or so. And those would be your upside and your downside levels to keep an eye on going into next week. Now, we'll jump into some individual names, starting with Tesla, which got absolutely destroyed this week. And you can see here that we've got a pretty defined broadening wedge here. So broadening wedge is just when your support and resistance zone are kind of expanding away from each other. So we're kind of in the middle of this area. You can see here that we do have support below in the low 500s and then resistance above in around 1100 or so. So there's a lot of room for this to move, and Tesla is definitely known for its volatility and its big moves. So, I definitely think you're probably going to see a pretty big move coming on this one with it being in the middle of this setup. Now, on the weekly chart side of things, I have used the COVID low VWAP. We're not there yet. So notice that we talked about the SPY hitting the COVID low VWAP, IWM, QQQ, they're already below that. So it's interesting that Tesla actually is still pretty far above the COVID low VWAP. And what I've done here is a COVID low VWAP as your original VWAP. And then I did two handoffs. So a handoff is essentially anchoring another VWAP from the last candle that touches the original VWAP. So here, this red candle right here is the last time price touched this COVID low VWAP. So you start another VWAP here. And then you can see here, this candle right here, I'll just point to it, highlighted in blue, is the last time that this candle touched this second VWAP. So I created another one here, and you can see it kind of creates a little bit of almost a ribbon. And so you've got a zone. You've got around, let's call it 505 all the way up to around 550, which would be a really strong zone below. And that's kind of right in line with this support zone below as well. So, keep an eye for the low 500s on the downside. The upside, this thing has some room above to even get above 1K again. Moving into Apple, and this is probably one of the better anchored VWAP offset case studies that I've kind of seen personally happen. And so a lot of people are kind of like, why are you using this random offset VWAP around the VWAP? And it's pretty simple, right? So I have, if you go to the properties here, I have a negative 6% offset on the original VWAP from September of 2020. So this is your original VWAP here. This is actually the original one, the thinner line here. And then this low line, this thicker line is the 6% offset. And it's not a random number at all. It's actually an area that price has bounced previously. So you had it bounce in November of 2020, and you bounced almost right at it in March of 2021. And so naturally, you want to essentially have that offset that has been tested in the past to have as a target again. And, this thing hit almost right on that negative 6% offset target. So I promise these are not just random offsets. There is logic behind, why I picked negative 6. And this was a good case study on showing, how this got a nice bounce after it did hit this level below. Now, on the weekly chart, you'll see here that the COVID low VWAP has not been tested on Apple yet either. That is down here around 125. Now, the thing is, Apple's literally had 7 red weeks in a row as well. Actually, 1, 2, 3, 4, 5, 6, 7, 8 red weeks in a row. So it would be kind of shocking to see at least some type of relief or breathing room here, maybe a little move to the upside, and then from there we can kind of reevaluate. But if this thing does hit 8 red weeks in a row, that's going to be definitely something that is very rare. And you can use the pattern feature. Once again, just type in 6 red candles, apply. The thing is, with this one, these hollow red candles right now, at least on the pattern recognition feature, are technically considered green candles, because the reason it's hollow but it's red is because this candle closed below this candle, but the close of this hollow candle was higher than the open. So technically the system recognizes that as a green candle. A lot of platforms, it's not just our platform, will consider the volume bar for this candle as green. So that's kind of where that logic comes from. We are hoping one day to be able to count these red hollow candles as a red close, technically, since it is, and that would be able to pull that up in the patterns feature. Now, going into Amazon, this one is bouncing at a pretty important level. So you'll see here that I drew this kind of bear pennant, if you will. Now, the reason I'm calling it a bear pennant isn't because I think it's going to continue down. It could, but we're already in a downtrend. So when you have kind of this pennant formation form in a downtrend, it's technically, a bear pennant until, if it breaks to the upside, then we can consider, a bigger upside move. Now, same thing here. You can use what's called the gap snake. I use this all the time, especially in the recent weeks with all these gaps literally filling to the downside. So if you think that there's this gap from April 29th is going to fill above, you can always set an alert around this area. You can set an alert for, if we get close to the gap above, when it starts to fill, you can remove the sensitivity. The sensitivity, this purple area, is how you can get an alert when you're getting close, not having to actually start filling the gap. Or if you only want to know when the gap's filled, you don't need to use the sensitivity. You just use the breakthrough trigger. So whenever the price breaks through that bottom gap, you'll know that we're starting to fill. So that is something that you can definitely use when you are looking to play gaps above or below. But all in all, we are right at the apex here of this kind of pennant symmetrical triangle. It'd definitely show up a little better if you went on a smaller time frame here. Now, on the weekly chart, this is just some basic horizontal support and resistance levels here. So this area is back from 2018 to 2020, where we had trouble getting above this general zone from around 2000 all the way up to around 2200. And you'll see here that we have bounced so far right at that level. So we'll see if that actually continues to hold or if we continue to break down. But once again, this is the 7th red week in a row. It would be shocking to see 8 in a row, but it is a crazy market. We'll just have to see what happens. But all in all, we are at a pretty important level here with a higher low on this week's candle. Going into ExxonMobil, this one has been very resilient. So let's turn off the gap snake here. And you'll see that we've got kind of this longer term ascending triangle continuing to form. You've got this horizontal resistance area that has acted as resistance once again. We did pop above it and had a new high here today on Friday. So if we do get above that, that would definitely be something to consider. But on the weekly chart, we are starting to slowly ride up along this ascending wedge resistance zone, and we'll see how long this continues to ride up along it, or if it continues just to break up straight through it. That is to be determined, but these are definitely some relevant levels to keep an eye on. Just essentially starting your zone from June 2020 and connecting it to this point here in March 2022 and giving yourself a little room. So if you guys want to see how I do it, I'm just using the linear regression tool that I saved as an indicator or saved as an annotation tool. So you can see here, I'm just connecting this to this. So I'm extending it over, and then I'm pulling it down to add some relevant price action down here. So it's not just an exact precise level. It's capturing a lot of that price action here. So a 2-point trend line becomes a lot stronger when you use a zone like this. So that is something I use all the time, and it's really just a great way to give yourself some margin of error around these areas. Last one that we'll go over is AMD. AMD is definitely another great case study on anchored VWAP handoffs here. So you can see here on the daily chart, we're in a pretty defined just downward sloping channel here. On the weekly chart, you can see here that the 2018 low is kind of our base VWAP here. And we used a handoff, right? So we're anchoring another VWAP from the last time price action touched this 2018 low VWAP zone. And you'll see here that we're literally right at it. So if we kind of zoom in here, you'll see that we did bounce right off of this area. And this is a very rough kind of looking bear flag. It's not perfect. A lot of setups in the market are not going to be perfect, especially in this type of volatility. You're going to have some crazy wicks and all of that. But I mean, if you zoom in on the daily chart, you'll still see here that you do have a little bit of a kind of a flag forming here, a bear flag. So we'll have to see what happens going into the week ahead. But all in all, at least we are holding that handoff VWAP from October of 2019, and that's definitely a level right around 84.50 below to keep an eye on. If we break down below that, then the 2018 low VWAP zone becomes relevant anywhere from around 70 up to around 74, 75, give or take 50 cents or so. So hopefully this video is helpful understanding how you can use some of these tools, especially in this crazy market, as well as just an update and a different perspective in the markets going into the week ahead. Really appreciate everybody watching. Please make sure to like and subscribe if you enjoy these videos, and we will see you next week.